Hello, everyone, and good afternoon. Thanks a lot for joining me in this live stream where we'll discuss the latest rebalance update in the balanced multi-factor portfolio. So, let me quickly share my screen and take you guys through this rebalance. Let me just start by sharing my screen. All right, so here we are. So this is the, order that we'll have. I'll discuss what happened last month, the reason for the performance, what we are changing to improve on that, what are the prospects in the next month, what are the addition, deletions, how the sectors have changed. And then I will take you through, our overview of the market, right? What we are thinking about the market, the broader themes, and which are leading to what the changes are happening in this portfolio. Obviously, we are just out of the Diwali season, which was, one big event where everybody gave you so much gyan about the markets, right? Like there were so many things that happened. There's so many, analysts, pundits who sort of came and, gave so much gyan out there that I thought that this time we will cut back on that and we will just focus on data because, there's too much of gyan out there. This time, the idea is to focus more on the data for us. So first thing here that I want to address is that, balanced out multi-factor had a month that was not that good, right? We did not end up negative, but we were lagging the index by quite a bit, right? And explain to you what the reasons for this is. So the balanced multi-factor has had an allocation to some momentum stocks along with quality and low volatility. And in these momentum stocks, one constant stock that we had in this portfolio was Tata Elxsi, right? Tata Elxsi has been the only IT allocation that this portfolio has had for a very long time, right? So while we have exited other IT allocations that we had, Tata Elxsi continued to be there in our portfolio. And when the market crashed, and not the market crashed, the market stayed robust, but Tata Elxsi crashed very drastically. We saw that correction impact our portfolio, right? So Tata Elxsi crashed somewhere around 20% in a couple of days. And that was, and because Tata Elxsi was around 10 to 15% of the portfolio, it had a huge impact on the overall portfolio performance, right? So that was one thing that happened, which was, which caused a huge impact on the portfolio. And we understand that this was happening. Obviously, Tata Elxsi, if you look at it, has been a very high-performing IT stock, plus it has had a low volatility, right? So it was very stable, even though the rest of the IT market was getting to a volatile phase. Compare it with your Persistence or with the KPIT, etc. Tata Elxsi has been the most robust IT stock. But only in the last month, we saw that finally this stock gave up. When the earnings came out and the predictions were put out, there was a little bit of the commentary from the management was not that good, and this stock crashed in just 2 days. So when a stock falls like this, it is very difficult for us to exit it, right? You can, when I push out a rebalance in the next day, if you get it, you will not get it at the previous day's price. You will get it in the current day's price, which is already down on the next day. So realistically, exiting it over these 2 days was not possible for us. And after that, we just waited it out. We see the little bit of recovery, some volatility, and then we have now finally exited it out because the prospects do not look very, very bright for the stock. And we will go through that in the later part of the presentation. But yes, so this was one of the major causes for whatever correction happened in this portfolio. Along with it, we had allocation to a few Zari stocks, some of these high momentum names like India Cement, etc., which also caused this correction. So this month, what we are reducing is obviously Tata Elxsi. It was a big chunk of the portfolio that has gone through correction, and the projections are also not very good. So we are taking a call to exit it. Along with it, we are exiting Hindustan Unilever, which has been a laggard in the FMCG space, and we are reducing our allocation to the gilt ETF that we have because the model showed the allocation to this, right? This is a deletion that is happening. Talking about the additions, we are adding Bank of Baroda, which is in the banking sector. Banking sector is having an amazing time. Bank of Baroda has also had a very good time with the PSU bank, and PSU banks have just outshone everything. So this is one addition that we are doing. Along with it, we are adding power grid within the power transmission sector. So while the global scenario is a little difficult, Indian domestic cyclical stocks, right, like power sector, logistics, etc., oil and gas, are still seeing, starting of a growth phase because Indian companies are growing and the capex cycle is going on. So that is the second stock that we are adding. And then we have Max Health, which is in the healthcare and diagnostic sector, right? It is in the hospital space, and pharma sector, is on a run, and we saw that Max Health is one sector that has been picked up because of its high momentum in this particular portfolio, right? So these are the additions that are happening in our portfolio, and we'll now see how the allocation is shifted with this rebalance. So if you look at the portfolio before the rebalance, so this is October, you will see that IT formed a chunk of the portfolio, right? And IT has been left, and FMCG, we had Unilever, right, which we have also reduced. So if you look at the portfolio right now, you will see that banking, with the addition of Bank of Baroda, has become the largest allocation in this portfolio. It is followed by your power generation, right? And then you have retail, you have IPC, you have and there's no IT allocation right now because things are not looking very bright for IT. There's no, and IT might come back in flavor, I think, in the next quarter or so. But right now things are not looking very attractive, so we don't have any IT right now. We have FMCG, we have hotel restaurants, we have pharmaceuticals, we have a little bit of bond exposure, we have entertainment, and some agrochemicals and plantations. Looking at the stock list, you'll see that Bank of Baroda is there, which is a high allocation here. We have, okay, I think this is not the correct one. I am so sorry for this. I'll quickly try to pull in the correct allocation, right? So yeah, so this time in the balance portfolio, because we have exited the stocks I talked about, Tata Elxsi, etc., we have seen that the allocation has sort of shifted a little bit. So the IT allocation has gone down, whereas the rest of the allocation, right, it is still there. And so let me just share with you my screen right now. Yes. So if you look at my screen, you will see that we have allocation in the banking financial sector. We have allocation, we do have, I don't know, it's picking Avenue Supermarts as bank, that's not correct. But we do have Bank Baroda, we have a banking ETF, we have ICICI Bank. And then, we have Adani Enterprises in industrials, we have utilities, we have transmission, power grid. In healthcare, we have Cipla, GCB Chemical, Max Healthcare, which we have just started. Consumer discretionary, we have India Hotels and Trend. FMCG, we still have ITC, Tata Consumer, Varun Beverages. We have PVR. In communications and automobile, we have Tata Motors and TI India. And in chemicals, we have UPL, right? So this is the allocation as it looks right now. Obviously, this is not correct. We don't have 31% banking exposure, but we do have around 23% banking exposure. So now quickly, I'll take you through what's happening in the market, and then I'll give you, which will give us an indication on why we have rebalanced, what are we thinking of, what are we understanding about the market right now. Like I said, this time there's no GAN, there's only data. This is what we'll focus on. I'll give you some stats on various sectors, and that will help us understand what's happening in the market, right? So first thing is that the big thing that has happened in the last month is the festive season, right? We've seen Dussehra, Diwali, and everything else. And during that season, The automobile sales just pick up, right? So during Navratri, the sales pick up 57% over the previous month, right? And during this festive season, which is from Navratri to Diwali, the auto sales have been 30% higher than last year in the same season, right? So, so because the economy is opening up, people are buying more, autos have seen a growth. If you look at the overall demand scenario, you will see that there's been a 20% growth in the overall yearly demand. And this demand is continued, it is expected to continue going forward. And that is what we will see in the auto sector, right? So auto sector is a big, bright, shining star. If you look at the earnings, they are coming from a very low base and they're showing very good numbers this quarter. So this is a very good sector to look at right now. Now, the second theme that is emerging here is the banking. Banking, if you are following the earnings or if you're looking at the credit growth in the economy, you will see that banking is also shining very brightly, right? You have growth in credit, which is 5x compared to last year. Obviously, last year was really impacted by COVID, but right now we've seen a very rapid growth in credit in the economy. Banking sector profits have grown somewhere, all the large banks, if you compare it, they are between 20 to 70% growth in profit. If you look at the growth in net interest income, that has also grown 20 to 50%. The deposits have not grown as much as credit, which could be a little bit of a worry. But overall, this sector has a very good prospect going forward in the next quarter, especially in a rising interest rate environment and with the growth that the credit economy and the domestic manufacturing is seeing. So banking is a big performer among all the sectors. And if you look at actually the stats of the month and the quarter, you will see that banking and financial services have outperformed all the other sectors. Like your PSU banks have given the best performance, and it is followed by your private banks, and then your auto and IT in this month, and then you have had metal in the last quarter, which has been in the top. So the big themes that have automatically emerged right now is your banking and auto, like I said, and not just auto. I mean, we are looking at auto to be a proxy for the consumption sector in the economy. But apart from auto, your electronics, like your Blue Star sector, are doing really well. Then you have other consumption linked things in the economy that are also picking up pace. And not just that, because the consumption and growth is picking up in the economy, you will see your cyclical, domestic cyclical logistics, distribution, gas, power, etc. are also picking up pace. So these are all very interesting to look at in the current market scenario. And what is not looking good right now is the IT sector, right? So if you look at the FANG stocks, right, your Facebook, Apple, Amazon, Netflix, and Google, you will see that apart from Netflix, all of them have had a huge correction that has happened. Why has that happened? It is because the prospects are not looking good. All of these stocks are showing a decline in earnings, decline in revenue, decline in prospects, right? While Apple and Microsoft still continue to be robust. Facebook posted very bad numbers last week, which is why it has seen almost a 20% correction. So with this correction happening in the global tech, Indian tech, which is a byproduct of that, will also be impacted, which is why IT does not look good right at the moment. But given the decline that is happening, these stocks should reach a bottom soon, and that would be a good time for us to buy into this sector as well. Looking at the global market scenario, you will see that India is still the best performing major market right now. India has corrected 7% in this year, but all the other markets have corrected much more. Looking at only the last month, which has been a slight recovery month in the overall global scenario, you will see that Dow Jones has grown the most, followed by Euro stocks and FTSE, and your Nifty has lagged in the last quarter because probably it was a slightly overvalued compared to the other markets, right, given that it hadn't corrected that much. What is really interesting to see here again is that Nifty has done so much better than other emerging markets. It's 25% better than other emerging markets, which means that the whole world recognizes the strength that the Indian economy is showing right now. So that is what we see. There are clear indications to buy into the consumption story, buy into the cyclical growth, buy into the banking sector. But we have to be careful about the IT sector, and we have to obviously be very, very careful about the global scenario, right? So the what will we need to watch in the coming week? So what I will be watching in the coming week is on third, which is day after tomorrow. The rate decision from the Federal Reserve will come out, and that's a big decision that impacts the whole market. Then you have on the same day, RBI Monetary Policy Committee is going to meet to understand what's happening in the inflation sector. We have a number of other metrics coming up for the Indian economy, the balance of trade, industry production, a bunch of other numbers will come out in this week. And then you have all these earnings because we're in the middle of earnings season, right? So this is what I'm going to watch out for in the next week. And let's now, if anybody wants to ask me anything, if there are any questions, please do post them and I'll try to answer you there. So I don't see that a lot of people have joined in this link, in this stream. But yeah, I see one question which says, why don't you notify about the rebalance a little bit earlier? So I take your point. We'll try to do a post on the social media, but generally you can expect the rebalance to come on the first of the month from us, and that is what the indication is. So thanks a lot for everybody who watched. I'll end the stream right now. Hopefully, going forward, we'll have